gain. Oh, 1 point away. Here we go. We're watching it. We are now up 504 points. We just set a brand new session high, folks. Now it's 506 points, 505. We are moving higher and higher. It's at 2%. On the line there, gain for the Dow Jones Industrials. I'm going to quickly just look at the S&P and look at the percentage gain. We have a gain for the S&P of more than 2%. NASDAQ, 2.75% gain. Please, for my viewers that love the Russell 2000, and I'm one of them, up 2 2/3%. It is a big move here for the small and mid caps as well. So here we go with the Russell, 41 points. Take a picture, folks. I don't remember the last time we saw that big a gain for the Russell 2000. Nice move
What's
there.
What's the scary sight?
Okay, he's showing me, in the midst of all of this, I don't know why, his hairy calf.
I ran.
Oh, you ran. Oh, with no socks. That's what
I
I'm
came
looking
back
at.
down here quickly because the markets were selling off. I had news to break. I just want to show you that I barely was able to dress.
Then you should have been
That's
barefoot.
why I came. Oh, come on.
If you were a true journalist, you would have run barefoot.
This doesn't look kind of cool.
Kind of cool? No. Nor does it look hot. Okay. He keeps moving it down. Thank goodness for our viewers. They do not want to see that. All right.
That's a scary
It's the
sight.
biggest gain for the Russell 2000 since right after Election Day, folks. Biggest gain for the Russell. What did I say? 41 points? Right on the money. Look at the NASDAQ. Better by 210 points. And what I'm going to do right now is I am going to just drill down a little bit here on the actual Russell. Blah, blah, blah. No, I want to look at the leaders on the NASDAQ. So we can do this with our Thomson Reuters data here. And as we look at the descending, it's Adobe, Dollar Tree. We told you about those. We do have BioMarin. Tesla is the fourth biggest mover percentage as far as percentages is concerned, Charlie. A whole bunch of other names here.
Tesla's
Workday.
moving? Why would Tesla
Workday
be
just
moving?
went public a couple of years ago. What a great story. Regeneron, Allergan, Alexion.
Why would
Nice
Tesla be moving?
It's a good thing he's not egocentric here. Let's bring in some of our traders once again. Alan Nuckman is standing by at the CME. We got Chris Robinson in the chair. Chris, you first. Tell me what you're noticing on a day where we are now up. Highs of the session, 524 points of gains. About 18 minutes left of trade.
Well, it comes down to percentages. We broke 7% last week. We've come back almost 3.5. It's a halfway back trade. I want to see how we settle on the week. You've got to get used to this type of volatility. I keep saying that. You know, 2018 is shaping up to be a year where the Dow is going to be in a 4,000-point trading range. And we've seen it. We saw it in January. Then we rallied back 4,000 points. We just broke 2,000 points. Now from the bottom to the top, we're back 800. So you've got to get used to these percentage moves. And I don't know if we're going to make new highs or make new lows, but you've got to get used to this type of volatility.
Yeah, and I would agree with that, Chris. Alan Nuckman, okay, let's just say volatility is back. Where are you seeing the smart money invest right now? Or are they simply going to cash on a day like this where you want to take some profits off the table? Is that what you're seeing?
Well, I'm still not a believer that the bull market is broken. I can make a strong bull case. Last week, if you look at it, it was more of an asset flush out than an unwind. You didn't see money come from stocks and go into bonds. You just saw money come out of the stock market because we'd essentially gone straight up for 3 months. So that's what I want to focus on, that you're seeing a bitter recovery once again, as we've seen each and every single time that we've had a major sell-off in the markets. But we also had last week a key reversal in bonds, which is a big deal, meaning that we made new lows in the 30-year and had a higher weekly close. So that to me tells me that some of the worst as far as the rate rise was over. And finally, we had fundamentals on Friday, and since that time we moved higher. Let's talk about the banks. 5 banks have reported, and combined, JP Morgan, Citigroup, Wells Fargo, Bank of America, and Goldman Sachs made $30 billion in quarterly profits. Things are going pretty well for those boys.
Yeah, I would tend to think so. Tim Anderson, you're at the floor of the New York Stock Exchange. Tell me what you've just seen. What's happening there? We're at session highs, 540 points of gains. Right now, folks, for the Dow Jones Industrials, the Russell, the small caps are seeing the biggest gain since Election Day. The NASDAQ is charging ahead. Go, Tim.
I think the biggest thing is all 4 major market averages you just mentioned have regained their 200-day moving averages. The buying is very broad across all sectors. Advancing issues are trouncing declining issues by better than 5 to 1. And interest rates have stopped going up. The 10 years at 3.15. It traded as high as 3.25 when things were getting a little panicked midweek last week.
Okay, so tell me again, the indexes that are now have regained their 200-day moving average move to the upside here.
All except for the Dow Jones Transports.
Okay, everybody. So the major indices have now done what they haven't been able to do for at least a couple of weeks, and that's regain their 200-day moving average, which for those of you who don't understand, it's like an indication of a certain sort of stretched out trend. Go ahead.
Right. They mainly broke those averages late last week, the second day of the sharp two-day decline. So they've just been below that for a few days. It's very positive to see them regain that this easily and not use the 200-day as a major resistance level. And, you know, we're day to day. I don't doubt that we'll have more volatility as the week moves on.
Hey, Tim, let me ask you a quick question. Do you think the market is underestimating not the rise in the Fed funds rate, but the unwind of the Fed balance sheet? I mean, that seems to me to be a real sort of, if you were thinking of an existential threat to the bull market, that would be it. It affects longer-term maturities. It's coming on potentially higher deficits. It seems like that's where the real push for the rate rise will be. And if you start looking at it from that standpoint, it seems like we're going to get. We may get like much higher rates, which could really be a problem for the bull market.
I think that's something to keep a very close watch on. I am certainly not a bond market expert or an expert on the mechanics at the Fed, but I'm sure they have dozens of professionals over there that watch that very closely, and hopefully they will look to feed that supply into the market in a way in which the market can handle it.
Yeah. Well, we need some more buyers, so maybe. You
got a lot of buyers here, folks. It's the Dow Jones Industrials. Hold on. I have a very nifty little chart here.
Maybe if we don't get into a trade war with China, they can buy some more of our debt.
Well, that's a possibility too. And we should, Chris, I don't know. You're there in the heartland in Chicago. There are issues. You had W.W. Grainger today getting smacked on a day where we have a great gain across the board for all the markets because they said they have had to put together a task force to see, it's down 12.33% right now. This is a big industrial company, to see how the China tariffs are going to affect their products, because a third to a half of some of their products, the materials are sourced from China. Chris? Can we get Chris's mic open?
Well, I could jump in here. First off, I want to come back and say that, when Charlie was talking about the Fed, I still have confidence in the Fed. They've gotten us where we are, and so they've played their hand very well for the last 10 years. To get back to the Grainger situation,
please.
You're talking about commodities, and those prices are still very depressed.
Yeah, but you're also talking about material. Do we have Chris's mic? No, we don't. Okay, we're trying to reestablish that. Okay, commodities, fine, but again, you're talking about perhaps the beginning, the early signs that some of these big companies here in the U.S. source part of their assembly, their products elsewhere, i.e. China, Alan.
Right, but that's not a secret. I mean, you could see that coming and going. So they can look for other sources. There will be other companies that will step up that have the means to supply what they need. So we'll have to wait and see. I'm not looking for that to be a broad, have a broad impact on the market. Get back to the Fed one more time, because that's an interesting point that Charlie brought up, that it is a large bond portfolio, that the Fed could just hold this portfolio and just let this money mature and so forth. So they're not forced to unwind it. So they don't have to have a fire sale. They have a systematic plan, just like they had a systematic plan to get us into the situation where we are.
Okay, we got Chris Robinson back. Chris, I'm going to change questions on you. We now have the NASDAQ up 3% in this final 11 minutes of trade. Folks, this is why we went commercial free, because what we are seeing at the moment is a rapidly growing momentum going into the close here. And this is the biggest gain since March for the NASDAQ. Dow is at near session high, 559 points to the upside. We're at 555. Go ahead, Chris.
Yeah, well, if you're looking at the rebound that we've had, It's just a situation where I think a lot of people got caught. Everybody got panicky last week. A lot of people sold S&Ps against what might have happened. Now they've all bought that back. And I think we're going to continue to see big volatility. You got to remember, when we have a 2 or 3% move, it is 400 or 500 points. So I continue to see that moving forward. And back to the China thing, I don't think anything gets solved until after the midterms. The Chinese are going to wait and see. If the midterms get out and we get that cleaned up, I think you may see a solution to this trade war.
New session high, a gain of 567 points. 10 minutes, folks, 10 minutes before the closing bell. Guys, we got some breaking news, and let's watch this. The Dow is up 541 points. We have exactly coming up on 3 minutes left before we hear that closing bell ring. S&P up 59. Here's the headline. A European Union Brexit negotiator, Michel Barnier, is now open to extending the Brexit transition by another year. This, according to the Financial Times. And what does that mean? That means that maybe there is a little bit more of a buffer zone, a time and breathing room between the UK exiting the European Union and the time that they can to make sure that the trade barriers stay down. Alan, can you quickly give me a second on that, Rechtschaffen?
Yeah, so I think that this is all comes into whether or not the markets are going to remain positive. And I think what Charlie was talking about before with the Fed balance sheet, this is what the president has been saying. President Trump has been saying exactly that the Fed can throw us off course. The Fed, with higher interest rates, especially with the balance sheet, I think you're 100% right, because now that's really kicking in. And as that kicks in, that could throw us off course.
I don't know why we have to, listen, I'm not an economist, maybe you know why we have to unwind the balance sheet that fast or ever. I mean, it's like we kind of bought it from ourselves. I mean, listen, I understand that theoretically you don't want to create money out of thin air, right? I mean, that's
well, we have, and that's why we've seen such massive asset bubbles across debt and equity.
Yeah, that's true.
They're going to have to unwind it a little bit, whether the market likes it or not, to have some tools available in times of crisis.
Hold on, less than 2 minutes to go before the closing bell rings. Alan Nuckman is being pulled away from us. So before we go, how do you predict this happens? We go a little bit lower here or higher and hit the highs of the session?
It's a strong day. It looks like it's going to flush out anybody that's short here today. Now, it's important to see what happens over the next two sessions. If we get the follow-through on this, 2825 is the number to look at in the S&P. That's the halfway mark of the all-time top to that low last week. So if it gets back above that, then we're making new highs once again.
Okay, and we also have some headlines.